Hello and welcome. You have tuned into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And don't forget that today is Friday, so we're going to be getting you Buy Now, Sell Now, Pathshala as well. But before that, let's have a look at what the markets are up to. So Cheryl, going into the long weekend, markets look cheerful as of now. Nifty holding above that 19,800 mark.
Absolutely. In fact, Shrishti, very good morning to you. I know you are very cheerful. It's Friday, but a flat move on the markets cannot be cheerful, is it? Actually, given the fact that this entire week, if you look at what the markets have been doing, absolutely nothing. Given the fact that you had a slew of IPOs also lined up, maybe that's where the action is. And definitely that is where the action is. But talking about the benchmark indices, 19,800 maintained for the benchmark indices. Talking about Nifty Bank, that one is performing a bit better than actually the benchmark indices. It's seeing gains of about 0.3% as of now. Let's take a look at what the broader markets are doing, the mid cap and the small cap index, and how they are performing in today's trading session. And both of them are actually holding on to some sort of a green on the screen as of now, with small cap index showing gains of approximately 0.5% or so. Talking about the list of gainers, then you have Cipla that is gaining about 2%. Remember, they gave the clarification also on that particular warning letter from US FDA. The details were out, so post that they've come out and clarified as well. So Cipla is trading higher by about 2%. Divi's Laboratories up 2%. Dr. Reddy's up 1.4%. Hindalco and JSW Steel are the other set of gainers in trade today. While on the flip side, it's HCL Tech that is the top loser on the Nifty, followed by Tata Motors, BPCL, Wipro, UPL as well. Talking about the advanced decline ratio, right now a tad bit in the favor of the gainers. Sectoral indices front, it's the IT sector that's the top sectoral loser, followed by FMCG, while on the flip side is the pharma, also metals that is holding on to gains as of now. So that's the way how the markets are looking like at this point in time. Shrishti, really lackluster trading session. Nifty actually flirting with that 19,800.
Okay, that's the way how the markets are looking like. But with this, let's move on and let's go across to the technical expert Kunal Bothra and understand which interesting topic he got for all of us. So quite an intriguing topic, Kunal, change of polarity. What is this? Take us away.
Thank you so much for that. So after quite some time, yes, we are doing Pathshala, and I thought why not, start off with a different set of a topic, something which we've not discussed, usually over the last, many sessions. Now, today's topic is change of polarity, which in very simple terms means that, when a major, a threshold line or a support or a resistance changes its characteristic or behavior for itself. So, in typical terms, we say that in magnets, the opposite sides they tend to attract, but in technical terms, in technical analysis, it's exactly opposite, where when you see opposing trends, they actually tend to repel each other. So we look at few examples over here that what does this particular change of polarity entails. Now the first chart is of course for Nifty 50, and this is a very recent chart what we've seen for the index shaping up. Now this is the first sign of a trend building up for the index, where the Nifty starts to get into a breakdown zone. There is a bit of a rally in between. As you can see, the rally halts at this major resistance zone. So when the rally halts at a certain particular set of point, we call this as a major resistance zone. Then when the index comes down and breaks past, we call this as a breakout. On the way down, when the index is going through a corrective wave, as you can see that the same point where the markets had taken a previous resistance now acts as a support. So this zone becomes a major change of polarity or a change of support for the index. And as you can see in the next attempt also, when the index corrects and comes back to this zone, it taps back into a strong support territory. There is demand which originates over here, and it tends to overpower the supply for the index, and that's where we kickstart a new trend. Again, a very similar kind of a breadth. This was the previous resistance, so which means on the way up, this was a zone 19,500 approximate, 18,800 approximately, which acted as a resistance of sorts. And on the way down, when the markets were going through this corrective wave over the last 2 or 3 months, as you can see, this 18,800 mark acted as a major support for the index. So this is what we typically call as change of polarity, where the same levels have two different meanings or connotations for itself. We'll look at one more example. That's on a stock like Infosys. And again, very similar kind of a chart. As you can see over here, that the stock in the last year 2022, entire 2022 was taking support at this major zone. So you can see multiple times when the stock ended a corrective wave, it tends to get back into a strong support territory over here. But on the way down, whenever the stock breaks below that particular resistance or a support, and on the way up, as you can see, this zone acted as a major resistance. Even here, as you can see, there was an attempt to try and claw back to that breakout line, but it failed to do that. So on the way up, whenever Infosys crosses above the 1600, 1650 mark, we call this as a major breakout zone and a start of a fresh rally. So this is what change of polarity generally signifies.
Alright, thank you so much for that, Kunal. And I like the fact that you yourself accepted that it's been a while that you've done actually Pathshala, and it's great to have Pathshala with such an intriguing topic, that's change of polarity. Thank you once again. But viewers, on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related query. Viewers, you know what you got to do. You have to write to us on the WhatsApp number that'll be flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention the stock name as well as the buy price and the quantity if you've already purchased it, as well as the time horizon and for how long you intend to hold the counter, because in that way we'll be able to direct your queries rightly to our experts on the technical front, which is usually the short-term investment and medium-term investment ideas. We have Kunal Bothra to solve your answers for that, and we have Avinash Gorashekar to talk about the long-term fundamental prospects about companies. Very good morning once again, Kunal, and good morning to you, Avinash. Thank you so much for joining us on ET Now. And let's start with taking all the queries that are already trickling in. And the first one is coming in from Matthew. He's writing to us all the way from Muscat, and this one is for you, Avinash. He's a long-term investor, but he wants to understand if it's the right time to enter Berger Paints as well as Bharat Dynamics.
See, I think if the investor has got a time horizon of at least 12 to 18 months, I think Berger Paints and Bharat Dynamics both look pretty promising. See, Bharat Dynamics, initially, to talk about the defense sector, is a very prominent player in the surface-to-air missiles. They have developed several new products for the export market. They have a large order book of almost 4,000 odd crores. So I think visibility in the next, say, 12 to 18 months is pretty solid, but the stock has moved up quite significantly. So I think unless the investor has a 12 to 18 month call, the risk reward in the short term may not be great, but yes, in the longer term, he could definitely make a lot of money. And coming to Berger Paints, I think the biggest positive for Berger Paints as well as all the paint players is that, crude oil prices have corrected sharply. This is following the fact that OPEC is now having some issues of controlling actions within its member community, and that is the reason oil prices have corrected sharply. Now if this trend continues, then definitely raw material prices for Berger Paints could obviously behave in a more favorable manner, and that could improve the margins going forward. So I think Berger Paints, even at the current level, one could accumulate, but keep a time frame of again 12 to 18 months. We could expect a decent upside, if the crude prices remain at the current level, then that could obviously mean better profitability for the company going forward.
Okay, moving on then, and Kunal, the next query is for you, coming from Mahesh. He wants to know about Biocon, one of the underperformers in the pharma space. Can Mahesh buy Biocon at current market price and hold it for the next 6 months?
Well, your time horizon has to be longer. I think Biocon is a stock which had showed a very good recovery from the 2023 lows. I think the stock was sub 200, moved up to I think as much as 265 or 270 over a span of 6 to 8 months. But then there was a news flow which I think has dampened the charts yet again for Biocon, which means that the stock would take more than 6 months to get into any kind of a major recovery. So your time horizon has to be long term, at least 1 to 2 years is what you should be looking out for if you're looking to make some decent profits on the stock. But yeah, I think at current levels it could be a good buy provided your time horizon is long term.
Alright, this one is coming from Sunny. He's writing to us from Kolkata, and he wants to know, Kunal, whether it's the right time to enter RVNL for the short term. He wants your guidance on that particular front.
Well, yeah, you can enter the stock at current levels. I think many of the railway stocks are inching back towards a breakout. RVNL, IRCON, etc. are looking attractive yet again on the charts. Many of these stocks have come back into a breakout mode. So I think you can consider buying the stock. But again, I would say don't buy this in isolation. If you can probably segregate it to maybe 2 or 3 stocks from the railway pack, depending on the chart structures, that will be better.
Okay, Avinash, the next query is coming from Parvinder Singh. He wants an advice on 2 counters. Firstly is HG Infra. He's holding 50 stocks at a price of 923 rupees. And the other one is La Opala, 100 shares at a price of 405. Any targets that he should be looking at for the next 1 year?
I think as far as HG Infra is concerned, the stock has corrected slightly mildly in the very near term. But I think if you look at the order book and look at the kind of growth trajectory which the management has commented post the quarter two numbers, I think over the next 6 to 12 months, a decent upside can be expected here. A price of around 950 to 1000 is comfortably possible, from the current level. So a decent upside is possible. And as far as La Puela is concerned, it's a very well-known brand in the cutlery space, has a premium positioning in the market. So I think here also, if the investor can hold on for the next 12 to 15 months, a price target of at least 425 to 450 looks possible. I think he needs to give in some more time here. Both are very good positional bets, but I think you need to give in a time of 12 to 15 months.
All right. This next query that I have is coming in from Sayak, writing to us all the way from Bangalore, and his query is, I think I have skipped his query by mistake. Okay, then let me take this one, which is coming in from Sudeep. He's writing to us from Kochi. Long-term investor wants to know about EIH versus Indian Hotels versus Lemon Tree, which is a better pick. Also, from the power sector, which one do you think is a better pick, Avinash?
So I think all the companies, Cheryl, you mentioned in the hotel space are attractive, but I think probably, if one were to look at the price factor, then I think Lemon Tree looks pretty attractive. If the investor has a couple of years, at least the next 2 years time frame in mind, then I think Lemon Tree can be a good positional bet. He could expect a very decent upside here. And as far as the power space is concerned, I think he should stick to frontline companies like Tata Power. Tata Power looks very well positioned. Not only is the core power generation business doing very well, but I think clearly the renewable and the green energy business is moving very smoothly. So I think over the next say 12 to 18 months, the year also one could expect a very decent upside, roughly a fair value of around 320 to 330. So I think this could be a good positional bet from the power generation sector.
Moving on then, and let's shift focus to the auto space. And Kunal, what's your take on Maruti? Jai Krishnan Kerala is holding the shares at a price of 10,440 odd rupees. He wants to continue this for a medium term. What's the target that he should be looking at, and what will be the advice?
I think it's a good strategy. You should continue to hold on to Maruti. Many of the underperforming or beleaguered, auto stocks are making a comeback. So I think last year, for example, you had M&M and Tata Motors, which did the more of the heavy lifting from the auto pack. This year around, you have Bajaj Auto, Hero MotoCorp making a strong comeback. Maruti also, I think, has made a decent comeback this year, breaking past over the 10,000 levels. So I think keeping that as a support, you can continue to hold on to Maruti.
All right. This one is from Sayak. I finally found his query actually. He's writing to us from Bangalore. He has Hind Motors, 3,800 shares at a price of 22.28 rupees per share. He actually bought it on the back of some positive news that he actually saw in the markets on backing this particular counter. Now he wants to know whether he should continue to hold or exit from this particular counter, Kunal. And the other one is Vodafone Idea, 30,000 shares of Vodafone Idea at a price of 11.8 rupees per share.
See, Hindustan Motors, I don't track it very closely, but then just looking at the charts preliminary, it looks like the stock is getting into a breakout zone. So even though this last 3 or 4 days it's corrected from 19 and a half to now sub 18 rupees, but I believe that this could probably at least come back to that 19 plus levels over the near term. So it's showing signs of a breakout, but maybe I'll have to scan it with in detail across various indicator timeframes. Idea on the other hand is something which you can hold on. It looks like the stock is getting into a bigger recovery as well as a stronger breakout in the medium to longer term time frame. So that's what I would recommend a hold.
Moving on, and Avinash, the next query is coming from Subramaniam from Chennai. He wants an outlook on Prakash Pipes as well as Prakash Industries. He's actually holding Prakash Pipes, 63 shares at a price of 277 rupees. He wants to know, can he book profits in this one and make a switch to Prakash Industries? What's the outlook on both of these?
I think Prakash Pipes and Prakash Industries both belong to the same group. In fact, Prakash Pipe was a demerged entity. My sense is, Prakash Pipes is a much better bet, despite the fact that, he's already made a decent gain here. I would suggest that he should hold on here. He could expect a further decent upside because, from the agriculture space, Prakash Pipes has got a decent market share here, plus opportunities in this space are increasing quite rapidly. So here possibly another 40-50 rupees of price of say 425, 450 looks possible. Prakash Industries is basically into steel making. They have an iron ore mine, and I think for the last couple of quarters numbers have been pretty encouraging. So I think here also I would suggest that if he wants to buy the share independently and take a position for the next 12 to 15 months, he could definitely buy in a small position. Valuations are attractive. I would believe that once global metal prices start improving, that would further re-rate the stock. But yes, definitely at the current levels, he could nimble into a small quantity and hold on for the next 12 to 15 months.
All right. This next one is coming in from. This one is coming from Poonam from Gurgaon and wants to know about IGL and SBI card for a period of 1 year. Kunal, what's your take on this one? I'm not sure if she's holding these counters, but in case she's holding on to it, what should be the strategy? And if she's not, then do you think it's time to enter?
See, I think IGL, I would recommend to hold on. Now, the stock is significantly off its 200 DMA. So, I think 450 approximately is the 200 DMA for the stock. It's currently at 390.91, which means a divergence of more than 10% to 15% approximately for the stock from its long-term moving averages. So, sooner or later, the stock would try and at least pare down the losses and come back to its 200 DMA. But then I would suggest just to hold on to the quantity, not to add further, because the only concern with such kind of stocks is how much time these stocks take to consolidate and then come back to that mean reversion zone. That's the only bigger question mark over here. So it's better that you park your existing funds or extra corpus which you have into some other performing or momentum sectors. So would be the case with SBI cards. Even this stock is drilling below its 200 moving average. I think there was a slew of negative news flow for the stock price over the last 1 week or so. I think that's also one of the major reasons why SBI cards is underperforming. So hold is what I would recommend for both of them, not to add.
Okay, Avinash, the next query is from Ramki from Bangalore, and his query is on Delta Corp. He's holding 2,500 shares at a price of 220 rupees. Is there any chance of a turnaround for this particular stock, or is it advisable to book losses at this point in time?
I think, Srishti, I think if he's a long-term investor, I think he should hang on there because casino business is extremely profitable and it is India's only listed casino stock. The stock has been beaten down largely because of the excise case, which is still, uncertain whether it goes against the company or whether there's some solution which comes out. My sense is that if he has a slightly high risk appetite, then I think he should average the quantity and keep a time frame of at least next 12 to 18 months. I would not be surprised that if any solution comes about in the near term, then I think that could make the stock bounce quite sharply. Otherwise, if he has a short term view, I think he should sell on rise.
Now wants to know whether he can go ahead and look at Sami Hospital. I think Sami Hotels. I think it's Sami Hotels and not hospital. Had it been hospitals by now, I would have heard Shrishti cover this particular counter, given that it's her sector. But Sami Hotels, what's your take, Avinash? Do you think that Padmaseva Rao can look at buying this particular counter right now? Fundamentally a good one. The reason why I'm not asking this query to Kunal, given the fact that this stock just recently listed.
No, I think definitely, again, hotel business is extremely profitable. And despite the World Cup over and the G20 now getting over in November, our sense is that, the hotel business is going to grow quite rapidly, considering the fact that, overall, this is a sector which grows with the economy. Travel and tourism is something which is going to grow by leaps and bounds over the next couple of years. So I would believe that, yes, if the investor has a 12 to 18 month time horizon, he could definitely look at buying onto this company. Although the company is not profit making, I would believe the next 12 to 18 months is a good period to accumulate. You could expect a decent risk reward, in the medium term.
Okay, moving on then. And Kunal, the next query is coming in on L&T Finance. The viewer name is Viji from Trivandrum, is holding 5,000 shares of this account at a price of 139 rupees. What to do next and any targets to look forward to?
So again, I think the stock did extremely well last week or so. The stock was almost at 150 plus, which was a fresh breakout for L&T Finance. But then I think there was a news flow which has dented many of these NBFC stroke HFC names. So I think that's maybe one of the reasons why L&T Finance has also gone through a correction. This could probably be a multi-week correction, I would assume, for these stocks. So I would probably expect L&T Finance to maybe come back towards 135 at least, and that could be a point where you will to average further.
All right, this one is coming in from Rajesh Pai. He's writing to us from Dubai and he wants a technical as well as a fundamental view on CESC. 1500 shares of CESC that he's purchased at 92 rupees per share. He wants to know what's the outlook for this particular counter. What sort of a target can he aim for this one for the next 18 to 24 months? Let me come first to you, Avinash, talk about the fundamentals of CESC. Recently, along with the earnings, the company did mention the fact that they're exploring options to actually go ahead and foray into the renewable energy space as well. And also there's a lot of buzz around this counter as well. What's your take coming in fundamentally? Do you think makes sense for Rajesh to stay put with this particular counter for the longer term?
Yeah, I think Cheryl, see, power generation is a very strong theme in the market, and CSC is a very strong player in Eastern India. The sense is that if they get into renewable energy, that would obviously add on to their capacity, and obviously green energy is now a very flavored kind of sector. My sense is that if the investor can hold on for the next 12 to 18 months, then a price of at least 140, 150 looks possible. I think they have been doing pretty well on the generation side. The green energy side business is yet we don't know what's the kind of capital outlay the company would be spending, but definitely at current level and considering the existing business prospects, one can definitely buy on dips and look at a kind of a time frame of at least 12 to 18 months and get a decent risk reward.
Hold on to it for the next 12 to 18 months. Kunal, for 18 to 24 months, what sort of a target do you think Rajesh can actually eye for this particular counter? And do you also advise the buying on dips and adding some more in his portfolio?
So yeah, buy on dips what I would advise. I think I recommended CSC almost at 84, 88, few months back with a target of 104. Now the stock had come back towards 103 odd levels. It's come back to 98. Now I think this could be a good correction where you may look to re-enter. And from a revised target on the upside, say with the time frame which you've mentioned, I would now place targets closer to 122 for CSC.
Okay, so that's the take coming in on CESC. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And continuing the same, Avinash, coming to you for the next query. This one is on West Coast Paper. A viewer whose name is Faisal, I guess he's writing to us for the first time and he wants an outlook on West Coast Paper. Is this a good buy for a medium term?
See, I think within the paper market, West Coast is a premium manufacturer of printing and writing paper, and in fact, one of the largest, paper manufacturers in the country. My sense is that paper market is going to show a good amount of buoyancy, considering that as the economy grows, paper consumption has grown. Post COVID, I think clearly we have seen most of the companies increasing prices, and in a supply crunch market, one benefit which most of the existing players like West Coast Paper have enjoyed is that demand is much higher than supply. So I think if he can have a time frame of 12 to 18 months, he could definitely buy West Coast Paper on declines. The stock is currently available at moderate to expensive valuation. So any dip in the price could be a good opportunity for him to accumulate, but keep a time frame of at least 12 to 18 months.
All right. This next one that I have is coming in from Sunny. He's writing to us from Mumbai. He wants to know if we can buy Kalyan Jewelers at current price. Kunal, he wants to hold on to this one for the next 18 months. Firstly, this one makes sense to buy right now or what should his strategy be?
See, I'm assuming that since you were looking to buy Kalyan Jewelers, and you would have studied the price action as well as the fundamentals of the company as such. And the stock has done exceptionally well in this year. I think if I'm not wrong, it's up some 150 plus percentage the last I had seen for itself this year. Now, what you are actually looking out for is that if you're looking to hold on for another 1.5 odd year, you would not be expecting a similar kind of a return for the stock price. So all you have to do is you have to start buying this in stages or in phases of the stock getting into a correction, an odd correction, so that even if you're looking at a say 1 year to 2 years plus kind of a time horizon, you're looking at least a 20% to 25% kind of a return for the stock in that kind of a time span, and that would be achieved by buying the stock or making opportunity of correction rather than buying this on rallies. So I will believe that you have to wait out for those points. Don't be in a hurry. So for example, if a stock retraces towards its 50-day moving average, which currently is placed at say 280 to 85 mark, that could be a good starting point for you to buy.
moving on then, and the next query that I have, Avinash, is coming in on Salsa Tech. A viewer named PVN Rao from Hyderabad wants a view on this particular counter. Is this a good buy at current market price?
See, I think my sense is this is a small mid-cap company operating in the construction space. If we can give a time frame of at least next 12 to 15 months, it's a small counter. Numbers, for the last couple of quarters have been pretty decent. So I think if you can keep a time frame of at least 12 to 15 months, I think he can hold on. He can even buy at the current odd levels. But at least the next 6 to 12 months is a time frame where he needs to invest and hold on.
One is coming from another viewer who's named as Sunny, and he's a regular viewer who's writing to us. And he has 72 shares of Ethos with a 40% gain. Kunal, he wants to know, should he be holding it with a trailing stop loss or book profits? How are the charts looking for this one? And he's saying that he is a little concerned about Ethos given the fact it's a small cap company. But given the fact that the Ethos is placed in a very niche category and a most category which is in high demand right now, isn't it? Luxury.
Well, absolutely. I think you've mentioned it perfectly that it's a niche category and it's a category of set of stocks rather which have done exceptionally well. So I think you've bought it at the right time because you're sitting on a 40% profits, which means your buy price would be closer to 1450, 1400 odd for Ethos. Again, I would suggest a hold on to the stock. Now, the chart history is of course a lot more limited, just 2 years of chart history so far for the stock price. But just looking at the way the space has evolved, I think there should be, this could probably be a much bigger, longer term story for, the stock. So I would suggest a hold on Ethos, even with that kind of a limited chart history.
Okay, moving on then, and Avinash, the next query is from Dr. Ravi from Bangalore, and he's planning to buy Bajaj Finance, the counter which has been in the news and have also seen a pressure on the stock price. Can he buy this counter at current market price with a 1-year investment horizon?
See, I think Shrishti, 1 year is a little too short because considering the fact that Bajaj Finance is already a stock where decent upside has already happened. My sense is, after Jio Finance has entered the markets, I think investors should look at companies where alpha generation over the next 2-3 years are going to be quite significant. So it doesn't point out to say that Bajaj Finance is a bad corporate or upside won't come, but the upside which possibly could come in could be at best be 15-20%. But on the other hand, a stock like Jio Finance could possibly work out better if the investor has a couple of years in mind, because I believe the opportunity for a company like Jio Finance is far much better than Bajaj Finance. So I think, if he has a short-term view and he wants a 14-15 upside, then I think Bajaj Finance can definitely fit in the bill. But a much higher alpha could come in from a stock like Jio Finance over the longer term.
All right. This next one is coming in from Deepak, who's writing to us from Chennai. Just a quick note to all of our viewers who are trying to connect to us on WhatsApp via WhatsApp call. We will not be able to take your call, so please don't call on the WhatsApp number. But however, you can write to us and we will take your query. This one's come from Deepak. He's writing to us from Chennai. He has 800 shares of L&T Kunal at a price of 3,098 rupees per share. He wants a short-term outlook on L&T. Also, should he look to average this counter right now?
So hold is what I would recommend, not to average. There could be a possibility that the stock may correct further. So what yesterday's candlestick showed that the stock or the demand for the stock is not as strong as compared to the supply, and that's why the stock has made a fresh low, breaking below a major candle support. So I would actually believe that the stock may correct another 70-80 points at least, which means 2,950 approximately could be a point where you may consider whether you want to average or not. But I think in that regards you can continue to hold on.
Okay, Kunal, the next query is on two IT names. Bishaka from Kolkata holding shares of Zen Technologies, 80 shares at a price of 201 rupees, and he also has Sonata Software at a price of 546 rupees. Good to hold for the next 2 years?
Yeah, good to hold for the longer terms. I think Zentech has done exceptionally well, now up to 700 plus, and Sonata Software also I think is done reasonably well, except for the last 1 week of correction for the stock price. Broadly, the charts for both of them have been very, very attractive. So I would consider to the viewer to hold on to the stock.
All right, this one is coming in from Vinod Nair, and he's bought Karnataka Bank at a price of 254 rupees per share. He's currently in loss Now he wants to know whether he should hold or exit this particular counter. Avinash, he was saying that his time horizon was 12 months. I'm unsure if it surpassed that 12-month time horizon for him, but yes, he's in loss. What should he do? Do you think he should be patient enough right now?
No, I think my guess is I think Karnataka Bank has corrected, but most of the negatives are in the price. I think he should give in a little more time here because the bank has shown pretty decent numbers in terms of asset quality, in terms of loan disbursements. So I think despite the fact that the stock has underperformed, if he can give in another 6 to 12 months, I think he would definitely recover his cost and make a decent risk reward. So I would still suggest that he should not book a loss. Like, please hold on for the next 12 to 15 months. He should expect a decent risk upside, risk reward from the current levels.
Okay, moving on then. And the next query is from Gaurav from Delhi. And Kunal, he wants an advice on Rain Industries. He's holding 3,000 shares at a price of 180 odd rupees. What's the view on this particular stock for the next 6 months to 1 year time horizon? Will this counter be able to give some returns?
So, it's I think the recent correction has been very steep, sharp for Indian industries, and this actually gels in with the entire long-term structure for the stock when it was almost 450 rupees in 2017 towards a point when Rain had come back towards a sharp correction to I think 44, 45 rupees. So even at current levels, I believe that the chart structure is a bit negative for the stock price, but it doesn't mean that the stock may not get into any kind of a major recovery or a rally. It's a very high beta stock, but then whenever it moves into phases of upside, you would probably get to cover your losses pretty quickly. So I think in that anticipation, I would suggest a hold.
All right, on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your queries then. And this one is coming in from Katir from Bangalore, and he has 500 shares of Yatharth Hospital, which is purchased at 400 rupees per share. Avinash, do you track this one? A recently listed counter, Yatharth Hospitals. Is it worth staying put for the longer term and in fact also adding some more in the portfolio?
Yeah, I think Yatharth Hospital got listed recently, and I think the first quarter post the listing has been quite commendable. In fact, it's a hospital which operates somewhere in Madhya Pradesh, and I think it's got a decent kind of a specialized setup which has helped it manage to record decent EBITDA margins. Hospital spaces in India are definitely quite promising considering the kind of big opportunity in the healthcare market. So here I would suggest that anything below 400 rupees could definitely be used as a good entry point to accumulate. The current holding, the investor can definitely look at holding on for the next 12 to 18 months. I think good long-term prospects. So I think he should continue to hold.
Okay, the next query that I have, Avinash, is coming from Siddharth Basu from Kolkata, and on one of the recent listing, that is Protein E-Curve. He's holding 40 shares at a price of 805. Post the listing, the stock has done nothing, but good to hold for the long term.
Yeah, I think Protein is a good long-term bet, Srishti. It's not a growth stock in that sense, but I think it's a very steady kind of business where the company has a monopoly kind of presence, specifically in the UPI as well as in the government regulatory space. Our sense is that if the investor has a 2 to 3 year kind of time frame, then only he should hold on. I think better bets in terms of growth could be companies like CDSL where the opportunity for scale up is quite immense. So I think CDSL can be a better choice, but in case he doesn't want to switch, he can hold on to Protein for the next say 18 to 24 months.
All right, Rita from Kolkata has Zomato about 1,000 shares at a price of 123.9 rupees per share, Avinash, as well as Yes Bank, which she's holding from the levels of about 21.59, about 9,000 shares. She's been holding these counters. Now she wants to know whether she should continue to hold on to them for the long-term gains.
Zomato, she can hold on for the longer term because Zomato has now started, showing very decent numbers. In fact, for the last 2 quarters, the company has shown decent profits, although, most of the profits have come from other income. But the market is excited that this is a very concentrated space with only two players, Zomato and Swiggy. And once Swiggy, goes public, you're going to see a decent re-rating in Zomato once again. My sense is that Zomato can be held on for the next 2 years. I think operationally, numbers are going to get better. And once the company turns around, starts making cash profits, I think the markets would further re-rate the stock. As far as Yes Bank is concerned, I think it's better to put the bet on some well-established banks like an IDFC First Bank or a Federal Bank. Yes Bank definitely has done better, but I think if you compare it with all the other banks, it's still a long way ahead for it to become extremely profitable and give a very decent risk reward. Asset quality has obviously improved because of some restructuring, but in terms of the capital adequacy ratio, it could happen that they might go in for another public offer that could further dilute the book value. So I think avoid Yes Bank and try to convert it to either IDFC First Bank or Federal Bank.
Okay, moving on then. And with this, let's kickstart taking your queries then in the rapid fire session. And the first query that I have is coming on SBI cards. Sheetal wants to know 1 year target on this one, Kunal. She's holding 100 shares at a price of 900 rupees.
Just continue to hold on. Don't look out for 1 year targets for SBI cards. My sense is that the stock would just consolidate at current levels.
All right, this one's from Biswas. Heidelberg Cement, about 282 rupees is the buy price. 2 years ago is what he had purchased this counter. Wants to know what should he do sitting in losses, Kunal.
Hold on to the stock, if possible, look to average.
Okay, the next query is on IEH Limited. Avinash Basab Dada is holding the shares at a price of 226 rupees. Wants to know the outlook on this one.
So I think again, from a longer term perspective, I think he should continue to hold. Maybe in the short term, the stock may not perform, but longer term, I think over next 12-18 months, he should prefer to hold.
All right, this one is coming in from Sunita Rai. Long-term view on Vodafone Idea. Kunal, 10 rupees is the buy price.
Would recommend a hold for the stock.
Kunal, the next query is from Kunal Thakkar from Mumbai. Holding wants to know good time to enter ITC for a short term.
I think 425 could be a good price if you're looking to buy.
Okay, Kunal, one more. ONGC. Vijay wants to know good time to enter right now. Wait for some more correction for ONGC.
Wait for correction. The stock is in news flow. I think the stock should correct by at least 10 to 15 points.
Okay, Avinash Rima is holding shares of Max Healthcare 80 in quantity at a price of 544 rupees. Wants to know medium-term target on this one.
So I think Max Healthcare should do decently in the next say 12 to 18 months. I think although the investor is in the money, I would say a price target of close to about 700 rupees is very much possible.
All right, 200 shares of Jindal. I'm unsure which Jindal is this. 635 is a buy price. I'm not sure if it's JSPL, but 200 shares. Abhimanyu Kohli has bought. Kunal, what should he do? Stay invested in this particular counter?
If it's JSPL, I think you should continue to hold on.
Kunal, quickly, Manjula is holding shares of Naukri at a price of 4,365 rupees. What to do next and any targets to look for?
Definitely hold. Look out for targets in the range of at least 5,400 in the next 12 months.
All right, and with that, we come to the end of this edition of Buy Now, Sell Now. It's a good buy. Or rather, thank you so much, Kunal, as well as Avinash for joining us today. And also, it's a good buy for this entire week's edition of Buy Now, Sell Now. So, it's a good buy from Shrishti, myself, our team of producers. There's Boski as well as Ruchira, and our director, Santosh. Thank you so much for watching. We'll see you next week.